Hey folks, Siam here. So I've been meaning to do this video for a while because it's got some great learning points in, but I've just been caught up. Anywho, this video is all about dealing with the situation when the shit does hit the fan and then the shit goes all over your face. And I guess the key thing here is don't swallow or lick. And so there's a whole bunch of little points here. Now the prime opportunity I want to talk to you about is with Time Wonderland. So what I've done is got the wallet in question, and I've been going through basically each line item from really the 7th of Jan onwards to see what I did, because I can't remember every single move because I was doing all sorts of side steps in and out, shake it all about. And so I've sort of recapped what I've done. So what happened is I had a pretty big position in Wonderland. Now I've gone, I put this into the 1 hour time frame just because I was trying to time stamp date, all of these actions. So obviously a daily chart wouldn't have helped. And let me explain what happened. So obviously, you know me, I was pretty big into time, and the reason being is that I liked what it was. I liked the vision it had, and that it was a crowdfunded VC firm, or another way to put it was a crypto SPAC, special purpose acquisition company, very similar to what Chamath Palihapitiya does. And it had good stats, it had close to $1 billion in cash. It was making shitloads of revenue per day. Conventionally speaking, it was good. So although it was in a systemic bear market, all I was doing is doing the hokey cokey. Now I think I'll put this last, but let's talk about this. The hokey cokey is what I call when you're sidestepping a falling market and getting back in, getting back out, getting back in, and the goal, the sole object of doing the hokey cokey in a bear market is that you accumulate more tokens than you had. Okay, so obviously when you look at this from the bigger time frame, you can see that the base resistance is just plummeting, but I was going in and out, and throughout this whole period I had accumulated way more tokens than I originally had, to the point where at the beginning of this, when I was looking at this little thing here showing you the token holders, I was noticing where my position was. So I started off about position 45, as in I had the 45th biggest wallet in the world when it came to time / memo, etc. And during the side steps, I was keeping close track of all the other wallets. Most of them remained static, so a lot of these were hodlers. But because I was doing the hokey cokey, I went from position 45 to position 15. So I basically raced up this ladder and got way more memo than anyone else on here, simply by doing this sidestepping and then rebuying and then sidestepping it, etc. Now the only time you do the hokey cokey is when you have an asset which you think will recover. Now obviously that is where I was flawed. I thought this would recover. Little did I know that the treasury manager was a freaking con artist, convicted felon, all that sort of stuff, and it wasn't just a one-off crime. This was a consistent criminal. So obviously when that came to light, the market really did collapse even more so, and obviously this was going during the rebasing death period. Anywho, let's get back onto this. So what I made a couple of mistakes, or in hindsight mistakes. At the time I still sticking to my guns, so I wouldn't actually change the way I operated. It was just unfortunate about Sifu. So what I did here, I actually bought a whole bunch more time around here, and I put a big chunk of it into liquidity pool tokens. So I was staking, bonding it, or minting it as they called it. Here I sold a bunch, so you can see here, what was this? So let's just double check this. The 14th of Jan, let's go to the 14th of Jan. 14th of Jan, Jesus, there's loads of transactions. So you can see here I sold a whole bunch, got best part of, what was that? Jesus, $1.2 million, a bit more than that, $1.3 million here, at sort of 1 o'clock in the morning on the 14th. So where is that? 1 o'clock in the morning. No, it's over here. Whoopsie daisy. So sort of 1 in the morning is around here actually. So I sold a bunch there as well. And again, 14th, yeah, selling a bit more, 1.4 million, but that was actually into an SLP, so liquidity token. So so a lot of this, whoopsie daisy, was actually selling, into basically minting it. Now, obviously, I was stuck for a period of 5 days during this. So the market then, so what I did is I sold a bunch and I put a bunch into minting. So I still had surplus cash. It then fell quite hard. I remember this is the one crash that really hurt me. So during all of this, I'd sidestepped nearly all of this crashing. Pretty much every big crash I'd sidestepped beautifully. It was as though I had a crystal ball during the whole time sidestepping stuff. It was beautiful. But this is the Sifu crash. And I got hit hard. And I remember I was watching, remember this happened at night. So I was watching Netflix, and I think I was watching The Witcher with Ellie one night. I just happened to look at my phone, looked at WaveAx, or this chart here, and the wrap memo chart, and it was absolutely dying. And I looked at and I was like, oh shit, honey, I've just lost $1.5 million, because basically up around here I had about $3 million worth. That's not the amount of money I put in, by the way, don't forget. I made loads of money with time up until that point. And then down here, literally as I watched it, as I picked up my phone, the total position was about 1.5 million. So I literally lost $1.5 million in the space of freaking no time at all. Now, this is where emotions and stuff come into it. Now, I've been around the block. I've lost so much money in the past that I've sort of become immune to it all. If you've ever seen my Instagram, I've put loads of loads of losing trades up on there, and so I knew that. So this, for some reason, I literally didn't react. I literally said to Ellie, "Oh well," and then continued watching Witcher. And then she had to pause it 5 minutes later. She was like, "Honey, are you okay?" I was like, "Yeah, it's fine. It's just trading." And then she found that a bit odd because it was, a lot larger than I've lost before. So, however, I knew from experience, one, that, the moment you act on emotions, that's where most people get wrecked. They go, oh my god, sell. Because at this point here, whoopsie, all you're thinking of is, oh my god, it's gonna, it's crashed from basically $3,000 to $1,000 or two 400 or whatever down to 1,000 or 700. It's gonna go to zero. But things don't move in straight lines that far. And I knew that this was massively overextended. I mean, look at the size of this candle compared to everything else. And I knew there would be at least a 50% pullback. Also, a lot of it, because I was still sort of minting, I couldn't do much about. But the free liquid stuff, I could. And so during this whole period, this circle should be actually a bit broader, I was redeeming and selling. So if I've lost my page again. So you can see as we go forward, there's loads of redeeming, unstaking, selling. So during this whole thing, I was, actually, in this case, I actually created more SLP on the 15th. So where is that on the 15th? Okay, that was up here. Sorry, we should have gone further down. You can see as we go, 18th, there's like lots of redeeming and selling going on here. So look, you can see I sold 5 wrap memo on the 19th there for basically, at this point I managed to get a big chunk of it out around the 19th. So, and the 19th is there. So what happened is, because I knew that this at least 50% pullback was coming in, I waited, and this is when I saw somewhat of a rising compression, and this is around where I sold. So that is where I actually got out. So the market pulled back quite a lot. So I think in reality I'd only lost. So it was so $500,000. I think it was only about a $650,000 loss in the end. Because this pulled back horrendously. I then did a speculative buy over here just to see if we'd get some sort of bottoming pattern, but that didn't happen, and then I pretty much sold, almost break even there, and then I exited for good here. So I haven't touched Wonderland since the 20th of January. Last one, the 24th of January, and then it died. It continued. It basically went from $900 odd to 128 where it is now, and it's still dying. In fact, in Telegram the other day, I texted out the high test. As you can see, where is that high test gone? There we go. That this would be falling and crashing, and yeah, it has. So that is what I did. So I did take a big punch in the face. However, I still made way more money. So although I lost a big chunk in this little drop here, or better looking at it on the wrap memo, I think it was this one here, I still made way more money during the whole period, because don't forget, when it came to Wonderland, we got in around sort of early September time, or mid-September. So I rode it all the way up. Again, it was rebasing all the way up, and then sidestepped and got loads and loads of tokens on the way down. So still end up net positive, which was good, despite the slap in the face. But now, yeah, I haven't touched it. Don't plan to touch it anytime soon. Yeah, and what happened over here on the daily chart created a big rise in compression on wrapped memo. Remember, the wrapped memo accounted for all the rebasing stuff, and I saw rising compression, typical falling, and we've finally hit this level where I said it would. So that's that. So the emotions, you just have to remain completely analytical, and literally just eject all emotions, and that's one thing I'm actually good at. Actions, I knew not to sell at the very bottom, because that never works. Always wait for a pullback, and yeah. I would say 90% of the time, big over-exaggerated moves do pull back 50% or more, and sometimes they don't. As in, like, the 5-10% of the time it doesn't, but that's just life. Also, let's talk about revenge trading. This is where a lot of people would try and win back all of their money, and this is where they would go all in again on the same asset. Sorry. And what you need to remember is, I will get my revenge, but revenge is served cold. So I'll get it not now. I'll get it on a different chart on a different time. Okay, so that's how you get your revenge on the market. Revenge is best served cold if you are going to dish out revenge, and yeah, you get it on a different chart at a different time. Later on, a few weeks later, somewhere else. So in effect, you don't exact revenge on that chart. Now, base support, base resistance. So again, I'm always talking about this. So for example, the reason I did, as I said, with time, I ignored the base resistance here, is because I thought this would recover, and I just wanted to gobble up as many tokens as I could, expecting some sort of bottoming and then recovery. But technically, let's say you're not going to do that. If you're remaining completely objective, you wouldn't get into this until it breached it. So you wouldn't get back into this until you had positive breaching. Now here we sort of dribbled out. And it's a bit like Ohm. I know I've talked about this forever. Look, standard base support, base resistance. I got in around Ohm down here, got out here at 950. Haven't touched it since. Well, I lie. When it dribbled out here, I got back in for a few days, and then it carried on falling, and then I got back out. So, yeah, and again, it's not good. Sorry, no, it's here I got back in because I drew another resistance here, and that's the dribbling. Yeah, got in around here, then out around here, break even. So that's that, and yeah, only do the hokey cokey and stuff which is actually solid and very likely to recover. So that is probably one of the errors I made, that time probably wasn't as solid enough to recover. Like, for example, the S&P 500, that's just not going to disappear. It will recover over time, especially with the expansion of the currency supply. So yeah, you can do it with stuff like that. So that's how you deal with shit. You shouldn't be really risking more than you can handle. Try and look at your risk in terms of time. If you get a big smack on the face, how many years is that pushing you back? So a 600 grand loss, or that 600, let's call it $700,000 or $500,000 loss, isn't, you know, putting me back 10, 20 years. It's just putting me back a couple of years. So yeah, you gotta look at risk via time. Anyway, hope that helps. There are many other things that I could probably show you, but yeah, this is just one. So in a trading pub, feel free to ask more screw ups I've done. Cool, cheers, bye.